Hello everyone, this is Okane. Welcome to the live session. We're gonna wait a few minutes for everyone else to join. So give me a few minutes, let's see if people start to join because this is live. If you're watching later on, you can just scroll forward, fast forward. I'm gonna talk about moving averages. Hello everyone, if you have joined, please type in the chat so that I know you're here so we can start. Just say hello or something in the YouTube chat so I can see you're here. Hello Milos. Hey everyone, just type in the chat so I know you're here and that you hear me. If you don't hear me, let me know. And for those of you who are not watching live, if you're watching after the recording, you can just fast forward until we start, because we usually wait around 5-10 minutes before we start. Okay, looks like people are dropping in the chat. They can hear me, so we can start soon. And remember, you can change the quality so you can see the charts better. You can watch in HD. Hello everyone. Good. It looks like everyone's getting ready. Okay, so I think we can start. Let's just do this. Go to the daily chart. So I have a Euro USD chart ready, as you can see. And remember, there's some lag, so give it a few seconds so that you can see the same thing as I do. Alright everyone, let's start with this daily chart. So the first thing before we move on, I want to show you is this triangle I drew a few days ago. I shared with you in the Skype group as well. For those of you who are members, you saw the price ranging up and down in the triangle, and then it broke, it came back, almost faked a break on the trend line, but then prices closed above, and now we have this huge bull. So basically prices got support here, so we might see another uptrend, a higher high, or I'm not sure, but what we know is that we got a support on the trend line. So it's good to learn to analyze higher time frames. And now I want to talk about just a simple strategy I put together just for the beginners to practice with, to have something to practice with, because I know price action is hard. So what I did was to add the stochastic oscillator, the typical one we talk about in the Skype group as well, stochastic 533 with the levels 20 and 80 that we add. And after that, all you need is a couple of moving averages. So this time we just use a 50 exponential moving average, and then we add another moving average, as you can see. So a 50 moving average, and then you add a second moving average of 21 period. There you go. So those are the two moving averages you need. And so far so good. Any questions? Let me know. If you came in late or anything, you have any questions, let me know. So basically what I've said so far is that I want to just show you a simple strategy for the beginners to practice with, and based on stochastic and a couple of EMAs, kind of similar to a strategy I started with when I was new. So this is the good thing with this is that you learn about trends and support resistance. And let's see how this works on different time frames. So the first time frame I want to look at is the hourly. You can use it on different time frames. You can use it on the 5-minute time frame if you want, but it's going to be too noisy. So let's start with the hourly time frame, see how accurate this strategy is. This is good to practice with on a demo, because you have to learn other things like support and resistance, because if you don't learn those things, you're going to have more losing trades than winning trades. So that's why it's important to also practice with this first, and then learn to adjust the support resistance lines, and then you're going to have more winners than losers. So let's start with the hourly, as I said. So the first thing we want to look at is the trend, and it's easy to find trends because you already have the EMA. So if the price is below the 50 moving average and the 21 EMA has crossed from above and crossed from above below the EMA 50, you have a downtrend. Okay, so that's to confirm the trend. All you need 2 EMAs, a 50 EMA, once again a 50 EMA, the green one, the red one is a 21 EMA. So once the 21, the lower period, crosses from above and down, you have a downtrend. But you also need to see that price is making lower highs. If it doesn't, like in this area, it's neither above or below, so you don't have a trend here, no trend here. But here you have a trend. So the first place we see after price was dropping here, right? You see that you're in a downtrend, so you would just wait. You simply wait. You wait for price to come back, and it gets what? It creates a lower high here. Lower high at this candle. Why? Because when this candle closed, what happened with the stochastic? You all know this by now. It became overbought, right? It touching or crossing the 80, that's overbought. And it did actually cross it. So a good overbought position. So then the next thing you do is to simply go back to the 30-minute time frame, and now you would wait for a 30-minute candle to close, and then you would enter for a couple hours a put option for a two hour or 1.5 hour of expiry. So that's how you use this strategy for the hourly trades. As you can see, it gave you another trade when the price came back up here. Was almost overbought, but it's still good. But then, as you can see, price kept ranging here, and this low was kind of higher, and then we have the trend line here, so we see that okay, it's kind of not good to enter puts here when we have this trend line and price is getting support. So you see, that's why the first thing I showed you about the trend line, it's important, because if you learn those things, you know which trades to avoid. If you don't, you're simply following the indicators and you're going to lose more than you win in the long run. So let's go back, and so now let's do a lower time frame. Let's instead go to the 30-minute time frame. And you can do this on the 30-minute time frame as well. So as you can see here, you had the price touch the EMA 50, and then you got this 30-minute time frame going down. So when you see, it's stochastic again, overbought on the 30 minutes. So it would go to the 15-minute this time, wait for one 15-minute candle to close down, right, bearish candle, and then you would enter trade for a couple hours. So again, it would have worked on the lower time frames as well. You have a nice trade here. This is, again, it's not completely overbought, but if you know price action, if you learned the EMA crosses, you could have entered here. Would have been a nice drop. So you see, it's all about your own analysis in the end, not just the indicators, because sometimes they lie. And so now let's also look at the 15-minute time frame. Let's take that approach. What do we have here? Lately, price have been ranging, as you can see. You see, it tells you when you're not in a trend, you're not in a clear trend. So let's see here. Let's see what we find. You see, it gets noisier when you get to these time frames. You saw how easy it was to find a trade on the 15-minute and the hourly. So this is the same trade, I think, on the 30-minute, but now you see it on the 15-minute. But it's noisier. As you can see, you get almost overbought, and then you might have jumped in here after this candle and it would have gone against you. But then, as you can see, it did. Once it did actually touch the line, became overbought on the stochastic here down below. And you see the candle, you get one candle down. So stochastic is moving down from the 80. And so basically, another 4 candles would have given you a winner, nice winner. So basically that's how you do it. And so shoot with your questions now. I only showed you put options. If you want, I can show you some call options as well. So just let me know. Do you want to see call options as well? Any questions? No questions now? Yes, shoot. Rob has a questions. So for those of you who are not watching live, again, I get questions in the chat when we are live in the YouTube chat. So you can subscribe to our channel so you can also join us live, and you can join us on Community Traders, the Skype group. Yes, Rob, did you have a question? Just go ahead. Okay, so what's what do you mean? Okay, so you want me to show you a call option. Looks like there's some problems with the chat sometimes. That's why Milos is giving me Yes, I understand. Okay, so you want me to show you a call option. Okay, let's do that. I just had a winner here actually. I was just checking that. Let me talk about it real briefly before we move on. Here on this candle, I had a winner right here. As you can see, the price action. Does everyone see this? We can see it on the hourly much better if I zoom in. Yeah, there's a delay, that's why the misunderstanding with the questions. But Milos is giving me the questions on he's forwarding the questions on Skype, so usually just give it a minute and it'll be good. Before I answer a question, just real quick here, my trade just expired. As you can see, it's just simple price action again. We have this huge volume dropping. Price came up here. I wanted to take it a little bit higher up, and I think I got in around here. It was a little bit too quick, but then as you can see, the drop was big enough as expected, so it didn't quite matter. It was a huge drop. Price dropped from here. I wanted to enter a second time from here, but then there was a pivot line right above. You can't see it here. Pivot is an average price. So average price was about here somewhere. You can see it on my other chart. I will show you later. Okay, so let's show you a call option. It's hard to show you a call option when price has been dropping like this, but here you go. Here you have a good call option. So first, what you see here is that, let's zoom out, let's mark it with some arrows so we know what to look for. Here you go. Okay, so what do you see here? The first thing you see here, how would you know this is a call? Can you let me know? Anyone? Any ideas? No problem. No problem, Ronnie. You go and you can watch it later. Yes, Rob, it's an uptrend, right? So how do we know this? Because we see the EMA, the short EMA, short period EMA, it crossed above the EMA. It's above and actually it has a good distance too, so you know, clear, nice and clear uptrend. And you have a higher low. Okay, so you have a higher low here, right? Why? This low is higher than the previous ones. Not a lower high. The lower high is for taking put options because it's a lower high, but this is a higher low, right? Because you look at the lows before where stochastic was oversold, for example, here was oversold. Now this high is above. Okay, so we have this higher low still above the EMA. The EMAs are still above, a kind of good distance here too. So you see the stochastic down below goes below the 20, comes back up. So here you have a good call option. So let's mark this and go to the 30-minute time frame. Here you go. So after yeah, exactly, after this half-hour candle you could have entered for a couple of hours or more. So what I've seen, you can backtest it yourself. What I've seen is that it works best for the hourly. You can also wait for a full hour to close before you enter. So after this candle closed, you would have entered, sorry, wait. Yeah, this candle has to close obviously. And then the next candle you would go to the 30-minute time frame. And then you would have waited for a candle to close up. So sometimes, as you can see, you don't get a clear candle. So this one wasn't clear, not a good entry. It was below the EMA, so you could have waited for yet another candle and then you could have entered here. Or you could have entered earlier, maybe and taken another call right after if you were insecure. So again, you can backtest this and you will see which that gives you the best trades, the best expiries. But at least 4 candles, whichever you take, I think at least 4 candles is good. If you're taking an hourly and you're waiting for an hour to close, take another 4 candles, 3 or 4 candles. If you're waiting for 15 minutes, let's go to the 15-minute time frame. See if the same. Okay, so on the 15, this was not an uptrend. This was not a higher low, but you had one here instead. So the 15, well, this was actually good. You have plenty of call options here. You have one here, have another one here, and you have another one here. Now this one doesn't qualify here because this low is not much lower than this one, but on the other hand, this low, this higher low is higher than the other one. So if you would look at it that way, and you still have the uptrend, the EMAs are still above, so this is still good. And after a good 15-minute candle, it could have entered above here if you had a nice bullish candle. So okay, I get a question about EMA 21 and 50. As I said, this is just a new strategy that I've put together. Not really that new, just basically I'm just showing you how to use lower time frame EMAs for beginners. This is a strategy for beginners to test, so you guys can have something to practice with and learn about trends, and then you can start adding support resistance lines as well to the strategy and move up and get advanced. So this is again just a simple strategy I put together using actually it's just 2 indicators, because you have 2 moving averages, so same indicator, and stochastic. So I'm just showing you how you can, with a couple of, well, let's say 3 indicators, you can find good trades. But as I said, in the end, it all comes down to your skills and price action, learning price action, understanding candlesticks. And this actually forces you to understand candlesticks. Why? Because you don't have much more. You have only 2 indicators. You know the cross, price is above, okay, that's all it gives you. And then you know the overbought, oversold. What you don't know is how to pinpoint the exact entries. And this is when the support resistance comes in. So as you can see, if we wouldn't have the EMAs, we would just delete the EMAs, right? We can even delete the stochastic oscillator. Now you can still trade if you know price action, just like Ronald does. You can also use this with price action, so you don't even need the indicators. And this is how Ronald trades. And just like he commented just now, that even advanced traders can use this strategy. Yes, as you can see, if we would have removed I just removed all the indicators. Okay, so now let's do the same trades again. Here you go. You have the resistance. You see this price was support, became resistance, resistance here, resistance here, and now it's support, right? So you would have waited for the touches and you would have traded call options there, and you would have gotten much better entries, right? You see the difference, Rob, Lily, everyone else? Do you see the difference now? That you would have gotten better entries without the strategy's indicators, because the indicators would have told you that you have to wait for candle to close and confirm before you can trade, and that would have sometimes left you to, for example, on this trade you would have entered after this candle and it could have gone against you for 4 candles and it would have closed down here and you would have lost. But with price action, as you can see, placing your line at the correct position, you would have traded the bounce here and you would have won already with the first move of buyers that moved the trend up. So I hope you all understand the difference. So now let's re-add the indicators once again, and what do we have? Do you guys understand? Do you have any questions? Did you understand the difference between what happened when I removed the indicators? Well, that's again depends on your strategy. Now, science, if you were doing hourly, you could have done hourly trades even with price action, but I do 10 minutes. You know how I trade, so you know that I do 10-15 minute trades. Just like the one I did just now, even though my line was on the hourly. You see this? Here's a good answer to your question, Rob. As you can see, this trade I took here, I took this put option here, and I did actually take another put option here before. So price was coming up. I saw the hourly chart. I put my line there. I took a put option, and it was just for a 20-minute option. So I still won the trade. As you can see, I could have done half hour, 40 minute, would have still worked out, but depends on your strategy again. So I prefer doing 10, 15, 20-minute tops. So any other questions? Great, you're learning. Nice job. So Rob did also take a put. Proves that they're learning price action as well. Really good. As you can see, there were no indicators there, but I still took a put option. So, simple price action. I didn't have to watch any indicators telling me. Well, except for the stochastic, of course, tells me about overbought, oversold positions. Confirms the support resistance lines. So now, actually, about the indicator, now let's do a 200 EMA. Let's see what happens. You see, it crosses this trade, but as you can see, the correct entry was up here. So again, the price action wins over the indicators. The price action gives you more accurate entries and expiries than the indicator does. So you would have entered here. I mean, you would have still won this trade, most probably, if you had a correct expiry, but if you had entered here, would have given you much better, would have been a safer trade. So you see the difference between indicators. I hope this is very clear to you now, because I hate it when someone says, oh, this strategy is going to give you a 90% win rate. That's why we don't like it in the forums, because the strategy is not going to give you. The strategy just tells you, okay, you have a lower high, you should just enter. You wait for an hour and then you take a put option. And that's not how it works in reality. So in reality, you have to adjust, you have to learn, you have to use price action, draw your own support resistance lines, and think, okay, this is actually going to go higher than my EMA, than where my EMA is, and then I should enter at a better price than waiting for the candle to close. So this is my approach. Everyone's approach is different. I know Ronald uses trend lines more than I do. I only use support resistance. So you saw example of call options and put options. Anything else? I would suggest you don't use it on the 5-minute time frames. I mean, you could, but it's too noisy. You might enter on the wrong candle and lose. Looks like we're getting a support here. But as you can see, you could have entered on this candle, but then you would have lost for 10 minutes if you use the wrong expiry. But obviously we're not doing a 10-minute expiry with this strategy. We're doing at least 4 or 5 candles, but again, you see the 4th candle might close here. So 5-minute time frame is too noisy. Keep it above 15 minutes. Oh yes, yeah, I talked about that a little bit, about how when the trend is stronger, you have a greater distance to the moving averages, right? So look at let's see this clearly here on the hourly. You have greater distance between the EMAs, so stronger trend, stronger downtrend here. Now here, as I told you before, I told you before that when the EMAs are in the middle, they are really close, almost entangled in each other. You have the indecision. I mean, you can see this with the candles. So even if you would have removed the indicators, you would see that, okay, we have indecision here, ranging prices. And then when you have a clear trend, you have again great distance with the EMAs. And when the EMAs crosses, remember that we are watching back in the price, we don't know this yet. So when the EMA crosses, it actually crosses right after this candle would have closed down here, these candles. So when you look back, it looks like it already was a clear cross here, but it wasn't. In reality, the EMA was still here until this candle, at least I think this candle closed before you get this distance here. So this is the problem with backtesting. But luckily we didn't enter here. We actually entered on the lower high, because now we have the distance. Now we know it's a downtrend. We know we have a cross. It's really clear. We have a distance. We have a stochastic. So we have lots of confirmation, okay? We have stochastic confirmation number 1, confirmation number 2, lower high. Number 3, we have EMA cross. Number 4, we have the distance. We have good. We are still below the EMAs. So, and when you learn price action, you get number 5. So now you have 5 confirmations. 5 confirmations. So that's really great. Try to learn price action. Try to draw support resistance lines and trend lines, like I showed you here. So any other questions? Good questions, guys. I like that you have so many good questions. Please keep doing it. No more questions? Anything else regarding anything else? Example of what, Ronald? I showed them examples of trades already. I don't want to do this too advanced for them, so it's just a simple strategy I want them to test on a for beginners. You don't need more than that. You don't need to see more than that. All you need to know is the simple rules. The simple rules are you get a downtrend, you get stochastic, either overbought or oversold. You confirm you have a lower high or higher low for call option. You wait for one candle to close in the direction that you want. The stochastic is turning down. Then you enter for 4 more candles for the expiry. So it's a simple strategy. And from there, you have to start learning on your own with price action, drawing lines, just as I showed you how you could have predicted a good entry based on the lines instead of only looking at the indicators. So that's all there is to it. You don't have to make it more complicated. And sometimes the indicators are in divergence, which means they don't agree to one another, but that's another story. So just keep it simple, and this is all you need. practice on a demo, and once you start learning to draw the lines, you will be pretty much trading like I do. So that's all you need to become successful. So one more time, let me show you the trend line. Before we wrap it up, I think I talked fast today, that's why it took only half an hour to explain everything. We'll try talking slower. But again, if you don't understand anything, I will just re-explain it. So just let me know. So it will leave us more time for questions. I can answer a lot of more questions if you have. So again, this is the daily chart. You see the price is making tops, lower tops, lower highs, and you have this bull candle breaking the trend line, creating an uptrend, and then it fell back down. So once it was falling, you could have predicted that, yeah, it will probably touch the trend line, and then it did a fake attempt of breaking it, but the candles did close above the line, exactly above the line, and now we have another bull candle coming up. So what will happen next? Maybe price will continue up, create a higher high, or at least at the same high, maybe a double top, or maybe continues down, or keeps being in indecision in this area. We can't tell for sure, but what we could tell that was the support here on the trend line, and as you can see, it did become support. So again, price action is helpful. Do these analyses. I mean, even if you're doing them, even if you're back testing, it's still good because you learn from them. So even if you're not doing the analyses live, just go back to your chart, place your lines, do the analyses. It will teach you a lot about how to understand candlesticks. So any other questions? Everyone understood the settings for the moving averages? 150 exponential, 121 exponential moving average, so two moving averages, and one stochastic, 533 for the overbought, oversold positions. That's it. Look for in a downtrend, the EMA 21 crosses from above and goes below the EMA 50. If there is a good distance that the trend is strong, so you wait for a lower high. You wait for a lower high, and then you go to, depending on the time frame you're looking at. So the trend, you look at the trend on a higher time frame. Then for the expiry, you will go to a lower time frame. You wait for one candle to close in the direction that you're going to take the trade, and then 4 times that for the expiry. And again, this is for practicing purposes, and you have to learn price action before you go live with this. Okay, so I hope that's clear. If you have any other questions, this is your chance. Let's do one more. Let's answer one final question, and then we will wrap it up. So now I hope the guys who are new, will get the chance to start practicing with something instead of just sitting around and wasting time on many different strategies that are a mess. Right, guys, thanks for joining. And also thanks for all the questions, very good questions. If you have any more questions, you can ask in the Skype group. Remember, we have a free Skype group for those of you who are watching afterwards. You can join us. It's Community Traders Live, the same name as for the YouTube channel. Alright guys, okay, I got a final question here. The 50 SMA, that's actually something I need to tell you, that that's smoothed MA, so actually the name is SMMA, okay, SMMA. So my fault, I called it SMA before. The SMA 50 is the same thing as EMA 99. It's the same thing. SMA 50, SMMA 50 is the same thing as an EMA 99. Okay guys, thanks, take care, I'm out.